Good morning everyone and welcome to another RF crypto video. Today's markets, we have seen quite a bit of an increase. The markets have gone up by about 3.5%, quite significant even for the crypto markets. The markets are almost $900 billion. Bitcoin is inching closer to 20,000. Ethereum has gone up by a massive 6%, but it's still failing to erase the losses from the last 7 days. So in the last 7 days, the price of Ethereum has fallen by 7%, and even this massive increase hasn't cut those losses. Rest of the market has gone up. We are seeing green. Not only are we seeing green in the crypto market, but the stock markets are seeing green as well. There is some positive sentiment in the market. There is a little bit less fear. I think the negative news that plagued the market, not only financial, not only economic, but also socio and geopolitical, has been priced into the markets. So that's why the prices have dropped a lot and now they're making a steady recovery. However, we have seen a lot of this in the past 2 to 3 weeks, where the prices of Bitcoin, Ethereum, and the crypto market in general has gone up, and we think, oh, maybe we're out of the bear market. Remember that Bitcoin at one point was at 21,000, and then we saw it suddenly plummeting back down to 19,000. So this might not mean anything. This might be a temporary correction for the market. However, it is always good to see green. And at the moment, people who have gotten in at 19,000 are making a reasonable profit. Circle CEO says that USDC stablecoin provider is in the strongest position ever. Jeremy Allaire, the CEO of Circle, who is controlling USDC, said that he can understand why the crypto community would be paranoid about USDC, taking into account the recent collapse of several prominent crypto projects. So the CEO said that Circle is in the strongest position it has ever been financially and continue to increase its transparency. And these remarks came amid rumors that the firm is at risk of defaulting on its reserves due to the large interest payments it must fulfill to crypto-centric banks like Signature and Silvergate. And I think these rumors started as sort of like a paranoid effect because this stablecoin USDC is being used in lending activities involving Genesis, BlockFi, Celsius, Galaxy, and Three Arrows Capital. And each of these crypto firms has been caught up in a liquidity crisis that has rippled across the entire industry. So because there's some correlation and because there's some overlap, people are now thinking that Circle will also miss their interest payments to Signature and Silvergate, which is not the case because they are stating that their reserves are solid, and they said that there's a difference between USDC's reserves and the actual USDC used in lending markets. There is some confusion between those two, and the USDC used in lending markets are away from Circle. They have nothing to do with the reserves. The reserves are one-to-one, so if they have $50 billion in USDC in circulation, they have to have $50 billion in liquid assets in their reserves because they need to be able to liquidate. If, let's say, you have 100,000 USDC and you go to Circle and you say, here's your USDC, give me back my dollars, they have to give you back your $100,000. And that's why they have one-to-one reserves. USDC is the second largest stablecoin in the market. They have a market cap of almost 56 billion. It doubled over the past year, gaining a lot of traction, and it's just under $10 billion away from the biggest stablecoin, which is USDT, controlled by Tether. Circle insists that USDC stablecoin is always redeemable for one-to-one versus the US dollar, any amount. So if someone owns all the market cap of, let's say, 55.8 billion as shown here, and they go to Circle and say, hey, here's your stable coins, give me back my cash, they will have to give that owner $55 billion in cash or EFT or any similar transaction. The CEO stated that we can make the assertion because USDC is fully reserved and fully backed with short-dated US treasuries and cash, which are very liquid assets and quite safe because US treasuries will never default. And these are denominated in dollars, and these are directly held with US financial institutions and custodian within US regulations, which means that they're following regulations, all the reserves are in the US, and there is some assurance that the stablecoins that are in the market are backed by actual liquid assets that can be redeemed at any point. And I think this was a little bit of a jab to Tether, which uses different types of assets, such as commercial papers from corporations, which is liquid, but it's a lot riskier because if these companies default on their debt, then Tether sits with a lot of debt that is unserviced, and it doesn't balance due to the fact that the assets are now worth less. Bitcoin, Ethereum jump as crypto market stages mini rally. As we spoke before, the crypto market is up. It's almost at $900 billion. All the major coins have seen an increase. And the reason for that is the improved on-chain user activity and healthy movement in total value locked across Ethereum in itself, which sort of trickle to the entire market. According to data from Glassnode, Bitcoin flushed out market tourists with only so-called hodlers remaining, which means that those people that buy and sell to make a quick profit are flushed out, and only those long-term holders are left in the market. These market participants have been responsible for creating something of a recent price floor for the leading cryptocurrency, which is Bitcoin, which means that all those hodlers made sure that the price didn't collapse further than 19,000. Despite that, the Fed will be having a meeting at the end of the month and will put this sort of mini rally to the test. If there's a massive increase in the interest rates, or there is a decrease in the balance sheet by a significant amount, then the crypto markets will suffer. It is panic to the markets due to the fact that lending becomes more expensive, and when lending becomes more expensive, investors tend to shy away from riskier assets like crypto and put more of their money in safer assets like blue chip stocks, gold, and safe commodities. So total value locked across Ethereum has increased almost 5% in the last 24 hours. DEX trading volume also up by 76% over the past 24 hours. NFT sales, which have been decreasing over the last few months, have also seen an increase of almost 0.5%. So it's a good sign. Not only is the crypto market on the green, but the stock markets are on the green as well. Not by much, but green is always good. This could be a temporary correction, and the prices might even fall tomorrow. Institutional investors shorting Bitcoin made up 80% of weekly inflows. So institutional investors loaded up on a record $51.4 million worth of investment products, offering exposure to shorting the price of Bitcoin last week, which is 80% of all inflows. However, there is something to highlight because investors are adding to long positions at current prices. And the data shows that long positions currently outweigh short positions. And the inflows into short Bitcoin is possibly due to first-time accessibility in the US rather than the renewed negative sentiment. So the fact that 80% of all inflows are short Bitcoin doesn't mean that it's negative sentiment, but it might mean that because it's a new product, people are aping into it. So it is quite reassuring, and we'll have to see where this goes from here forward. Indian crypto trading volume slump following hefty taxes. So trading volume across 3 major crypto exchanges plummeted by almost 75% on average since Friday, when a 1% tax per transaction was enforced in the country. And this makes sense because why would you tax at source? Taxing should only take place if you make a profit, and obviously if you implement taxes, then trading will fall. The regulation in India hasn't been very crypto friendly, and it's been based a lot on taxation rather than on innovation and on adoption, which will obviously see a lot of volume flowing out of the Indian crypto market. And one of the crypto traders has said that he's still trying to figure out if it's possible to stay profitable on Indian exchanges due to these taxes, and if not, it will lead to another brain drain of professional traders to other countries like Dubai that are more welcoming, because Dubai has one of the most lax and friendly crypto laws in the world. And this 1% tax will be in effect for 3 months to test and determine the impact it has on the market. And trading volumes are now low, but policymakers are seeing it in a broader scale. However, they are seeing that this crypto tax is leading to an outflow of cash from the crypto markets in India and from India itself, and it will also dissuade newcomers and low-frequency traders from gaining crypto exposure in India. And it's never good news when such regressive and restrictive regulation is put into place, especially with taxation. Hopefully this tax gets reversed and more crypto-friendly regulation gets placed in India. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely. Cheers.